Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Market Analysis, weekly market analysis. Very happy to be out with you guys today. It is February 9th. You guys know what next, and I say guys because we all know. You guys know what next week is. We got to start making sure that we have our flowers, our chocolates, and our stuffed bears ready to go for next week. I can't believe we're already almost halfway through February, right? I mean, it's the 9th, right? But man, we are right there. I feel like we're cruising through it. It just felt like New Year's yesterday. And for those of you that don't know, Chinese New Year is fast approaching in the next few days here, and it is kind of a little bit longer of a celebration. My daughter is half Chinese, so it's something that we do celebrate in our household. We don't have the gifts and everything everywhere, but with COVID, it's kind of hurt us. But it is kind of an interesting and fun time. And again, obviously, with the Chinese New Year, production, shipping, everything in China being, a huge economical powerhouse out there, things change a little bit, and there's some trading opportunities based off of Chinese New Year. Not one just specific trade, but there's different, there's definitely a different type of market during that time. So again, something you got to keep on your radar. Before we begin today, for those of you that are new, welcome out to our weekly presentation. As you guys know, we do a morning session Monday through Friday from 9 to 9:15, and then once a week we kind of break these down on a weekly basis and kind of look at a couple different things. But each morning, if you guys are not attending, make sure you do that. That's over on Nadex's YouTube, and very easy to catch. You'll get a notification if you subscribe and click the notification button. You'll be able to catch those every morning. All right. For those of you again that are new, my job is really to kind of help educate you guys. My goal every single week is for you guys to get some type of golden nugget out of these presentations, find some type of trading opportunity, maybe get the confidence to trade maybe a different type of contract that they're used to trading. I'm a very big believer and supporter of the shorter duration, not only binaries, but then even some of the call spreads, around news trading. I absolutely love news trading. And I'm also a very big supporter of the knockout brackets because they are much more in touch with, current price, and that I feel like call spreads are not. Developed a number of different courses that are specifically Nadex based. Again, been trading since about 2000. So, I mean, I've seen, I guess at this point, I could probably say 3 different bubbles, but 2 different big bubbles: tech bubble, real estate bubble. I've seen up, left, right, sideways. Started much like you guys did as a retail trader. I didn't start as a 5th generation or 12th generation floor trader or anything like that. I don't live in Chicago or New York, although I did used to work right across the street from the New York Stock Exchange. And for about 2.5, 3 years, I used to walk past it every single morning. And actually had the opportunity of teaching some floor traders or previous floor traders how to trade the markets in kind of this new environment. Did spend some time in an advisory division in one of the big 3 banks. I got to learn all about bonds. I had no idea how much control and how much power and really how big the bond market actually was. I thought it was just something that old people bought. Didn't really realize how much it controlled the market. Definitely helped kind of change the way I learned, looked at the markets. And since that time, I've left that industry and really gone out. And my mission is really to help people do it themselves, to teach people how to do it. This is the family. Obviously, it's kind of funny. The one on the right with the long hair is the one with the shortest hair right now. The baby's hair is down to the lower part of her back. The boy on the left, his hair is well below his shoulder at this point. I think he's had 2 haircuts since COVID, and it was to trim the ends. And my hair is also a lot longer there too. My wife, Melissa, she looks exactly the same. She's the only one that looks the same in that picture. But great family picture of us. And I always like to point out that I am also a family man. I'm not a guy that sits in front of this computer for 20 hours a day trading. I like to do other things as well. So with that said, let's go through and let's cover the Nadex risk disclaimer before we cover charts or anything like that. Trading on Nadex involves risk, and it may not be appropriate for all. Members risk losing the cost to enter the transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material included here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. I will talk about different currencies, so it's not just about Nadex too. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Now, here's what we're going to cover in today's session. We'll take about 40 minutes. We were just joking that I could never finish in 45, even though that's kind of the goal. right? But we're going to cover the upcoming news events. I mentioned I love, love, love news trading. Um, for me, news trading is sexy. The reason why is because I don't have to sit there all day waiting for something to happen. I know when it's going to happen, weeks in advance, months in advance, even years in advance of when news releases are going to come out. So we're going to cover what you should be looking for. Last week we had some really amazing setups off of off of news events. Then we'll cover the indices, see what they're doing for the day. We'll look at Forex as well as we will jump over to commodities. Now, it's kind of funny. Oil did a bit of a double take. We were getting, rallying up. We'll kind of dive into that. And then gold this morning has been a ping pong table, right? We had to push higher. It ended up looking like it was breaking its zone. Then it pulled back, then went right back up again, and then pulled back down again. So gold is doing one of those which way did he go type days today. So we'll break that down and see for the rest of the week what looks good. All right, so at this point, let me switch over. Let me get my Forex Factory window up here. All right, so you guys can see it. We'll go across right now, and you guys know I use Forex Factory all the time. I use this. I use DailyFX. You can see that's up on the window as well. Basically, what I do here, the first step is looking at that 24-hour pip change. I want to know how much movement have we seen in the last 24 hours. Where are the movers and shakers? Because again, when the movers and shakers are too big, I love those reversals. That's one of my favorite trade setups that exist. So right now, looking across the top, again, it looks like again, we got dollar weakness more or less across the board. Euro dollar up 56 pips in 24 hours. Pound dollar 56. Dollar yen down 60. That's pretty big. Dollar Swiss. There's a nice little trade set up in that one that was there earlier this morning. You guys know what it's called. I'll show it to you in a second. Dollar CAD down, and again, I've been on this one. I'm very supportive of the dollar CAD going lower. My wife obviously is Canadian, so this benefits us as well. Aussie dollar down, euro pound, and then pound yen. Again, a little bit more flat. Like I said, it's more of a dollar story at this point. News this morning, nothing crazy. We have some CPI data coming out of China tonight, but I'm not as concerned about that one. Let's drop this, and I will kind of give us the week at a glance. Now, this is not the biggest week of news releases. I would love to say, hey, listen, there's a ton of setup. There's not. Tomorrow is really probably the best day news-wise. CPI tomorrow morning at 8:30. Very important number, actually, core as well as CPI. This is a gauge of inflation. Okay, now inflation is good, but inflation is also what the gold traders out there have been looking for. They've been dying to see inflation, right? Why? Because with inflation comes hedging, and hedging means more demand for gold, which means gold can go to, I don't even know, some of the crazy things that people have talked about. We also have crude oil. Now, crude oil has been on a tear, and for lack of a, it's been just cruising, with no real definite kind of reason why, right? I mean, we're talking about the demand for oil being lower. OPEC's like, oh, no, supply is going to be down. Well, yeah, but supply is down, but not as many people are traveling. There's still lockdowns. I mean, overall, before COVID, BP's report said that the demand would be lower for this year, regardless, right, for oil. But that was before COVID, and COVID is still here. It hasn't gone anywhere. It's still, definitely out there. People are still getting it. Again, so it's kind of been an interesting play there, the way that one's been moving. So crude oil number is one of the big ones of the week. I definitely like that one as well. We have Powell speaking tomorrow. Now, Powell's a guy that he's literally, I don't know. I mean, he is a boom or bust type person, right? He is a boom or bust person. He either says nothing that makes any sense to anybody out there, and the market's like, okay, did he speak? Did he say something? Or he says something that's so earth-shattering, the market goes crazy. Well, guess what? He's speaking tomorrow at 2 p.m. We're talking about inflation, very, very important. All right. So again, that could be a big mover or provide nothing. It depends on what we see with the CPI in the morning. Now, Thursday, we have some EU economic forecasts. All right. Now, data recovery, recovery that we've seen so far has been okay. The projections are we're going to have a strong 2021. Again, throwing lots of money out there, they better say that it's a strong recovery because, yeah, we print this much money and we don't have a super strong recovery back to where we were before. Yeah, people get angry. And I do think that, again, I think they are being slightly more positive than they probably should be. Again, that's just my opinion, my personal opinions on it. But I feel like right now they're blowing a little bit of smoke, and we need to be very, very cautious with that inside of the markets. but we'll see. And then unemployment claims still, it's great to say we have a massive recovery, but we still have 755,000 people making first-time unemployment claims. So yeah, there's that, right? That's all we got for Thursday. Friday, we have this preliminary GDP number for the pound. Now, the pound has been rather strong. I know a lot of people out there necessarily are not currency traders, but some of the absolute best setups that we've had in the last 2-3 weeks have been pound trades. That European session has been going like gangbusters if you've been able to figure out the trend early on, and a lot of it's been based off of news. All right, now this is expected to be a GDP, and again, last time the 16, ignore that. When you're looking at this, it's like, well, yeah, it was 16 last time, it was 5.5, but yeah, it was down minus 18 before, and so again, 0.5 is a more realistic kind of almost post Brexit. Right, it's a quarter over quarter. 1 quarter ago now, we were in the thick of what was going on with Brexit. So again, this is a pretty interesting number, and this could really set it off. If you guys are looking for a great trade on Friday morning, this is a perfect catalyst for that. And again, I'll show it to you guys in a chart, but you can play the pound dollar, the pound yen, and you can play this with a couple different things depending on where you live and what time zone and how motivated you guys are to get there and make some decent trades. So pretty important, right? So that's what we have going for the week. Next thing we have is, again, it's late Monday night. We have nothing over the weekend, no Chinese news. So again, a little bit of an anemic week. It's not as, I don't know, not as fruitful and crazy as it could be, right? It could be much crazier. And again, I love the crazy. The crazy is great because I know that at 10:30, I need to be looking at crude oil. At 2 p.m., I need to be looking at anything dollar-based because, again, interest rates, recovery, stimulus, those are all things that Powell talks about. And again, 8:30 in the morning, what does the futures market look like, right? CPI, again, is one of those things. If you like the indices, like trading futures pre-market, there you go, right? So again, you can dial in, really focus kind of what's going on. All right, so let's jump over. Let's go into the charts. Let's go over and start pulling the indices. Now, I haven't updated all of these for this morning, so some of these levels may be slightly off, but we will kind of go through.
Hey, Brian, real quickly, just one thing, just because you were talking about calendars and schedules, I just thought I'd toss it out there. Next Monday is President's Day. Nadex will have our FX markets open for a good chunk of the day, particularly the European hours. So something we've been doing recently, that those European hours that you're talking about, where there's a lot of opportunity, interestingly enough, they don't celebrate President's Day in Europe.
Do they have presidents in Europe? I feel like
for some reason they just don't. Those Londoners, those folks in the UK.
I mean, that's like the UK, right? They celebrate the 4th of July in the UK also, right? Oh, wait, no,
yeah, that one too.
Yeah.
So Nadex. So Sunday night, you'll see the FX markets open. We will have access to those markets in the European hours, as we should, because people are looking specifically for exactly what you were talking about, access to those foreign exchange markets in those European hours. Even though it's a U.S. holiday, people will still be able to access those markets at Nadex. I thought I'd just kind of toss it out there because it is something that we've been doing this year that makes a lot of sense. So, sorry, you can carry on now with the charts.
Oh, okay, no big deal. No. I had to type something anyway too. Yeah, one of my students is like, "Oh my God, did we lose sound?" I was like, "No, Todd's just speaking. I don't have it set to system sound, guys." they were all concerned. They thought that the stream got broken or something. Anyway, let's start off with the NQ. This has been the one that's been kind of the craziest. And again, not when I say crazy, I don't want it to come across sounding bad. The reason I say that crazy is because the NQ has had some major movements, up, down. I mean, it's been all over the place. It's been very in touch with COVID because again, it is more technology focused. Now, as you can see here, we had a very, very large spike. And the problem with this, and again, I'll go back to it daily. It's a little bit busy. I should probably go get rid of some of the old numbers on here. But as you can see, I mean, we're very, very high up here. Again, on the curve, we're flirting with all-time highs. And I've mentioned this over the last few days, weeks. The NQ is one of those things that, like, where we are now, I mean, we have money from the stimulus from last year that we haven't spent yet, right? We just came out with this $1.9 trillion package. I mean, we haven't spent the other stuff. We got more stuff coming, right? The numbers are looking good. We're starting to see some healthy inflation. I mean, it's one of those things. typically, the market and the economy are two separate things, right? The forces that they are using right now to, get us out of that recession or try to avoid a major recession are factors that, I mean, for lack of a better word, the indices are on crack, right? I mean, we are going to all-time highs, the best that it's ever been, right? But yet we still have major issues with lockdowns and everything else. So, you know, trying to figure out exactly where the top is on any of these things is always going to be dangerous because we have no precedents set of where sellers are going to be. Now, there's tools out there that you guys can, try to try to guess, and there are extension tools and things like that. Trying to grab the exact top, very, very difficult to be able to do. Now, we knew this morning early on, and if I reset the time on this one, you guys can see. Let me get actually, I guess you guys can see it here. You guys can see that where we tagged this line, this was that 9 o'clock, 9:30 open this morning. We really didn't have much trend direction, but we knew that we had buyers in that area, and that was the takeoff point today. That was literally the trade of the day for the NQ. Now we've kind of hit a top. We're seeing price kind of roll back over. And again, I don't trade indices as much. I do follow them. I do, chart them for people and things like that. But a lot of my students are much more into the indices than I am. A chart is a chart is a chart, guys. It really doesn't matter what you're looking at. You can absolutely look on here and trade them all the same exact way. It went off of an area where they should have got into the market, and I'm sure some of them did. I haven't checked in with them this morning. Typically on Tuesdays, I'm busy. But right now, what we can do is we can see that we kind of have a top and bottom put in here. Now, we do have a little bit of a level up here, right? We saw a level of, a strong emotional push off the open, a base, and then probably profit taking, and the price kind of pushed back down again. Now, this is one of those learning points. I've mentioned this in the past. The most common reversal times in the morning, or really the most common reversal times at all, are typically the 10 to 10:30 window. Well, this candle, the spike candle, just happened to be the 10 o'clock, and we reversed right back down again. So, it's in one of those positions. We'll see what can happen. We'll see whether or not we can, stabilize the base here. But if you're looking for something to get short, I mean, there is a small little level up top. But at this point, I really think trying to pick a top in something like the NQ is dangerous because any type of release of news that we hear, whether it be an economic release, some type of news headline, some type of tweet, right? All of these are going to be positive, right? For increasing the stock market right now. About the only thing that can mess up the indices is the Fed Powell saying, you know what, everything looks so great. Maybe we're going to raise interest rates in 2022 instead of 2023. That's about the biggest thing that could kind of send this through the floor. The only other thing is if we hear any news about, a COVID-19 related type news issue. And again, that could sound, and again, this is just an example. If we hear something, and again, we've already seen actual facts and data based off of it, we hear we start to hear a common trend of people getting COVID that have had the vaccine. That's about the only thing that can turn and flip this market down right now. There are no other economical factors that really are out there, right? So again, I think the best way to play this would be looking for pullbacks. I mentioned every week at 12 o'clock is not when to find those setups, but again, learning point here. I'll move this to the side a little bit, or I'll just move this out of the way. Again, look for these big areas of basing. This was a great trade setup from this morning. Again, huge rally up, nice little run. And again, look for one of those tomorrow mornings as well. Again, I talk about the short duration. This is 45 minutes, this entire burst. Okay. So again, if you're able to use a shorter duration contract, you have a smaller strike width right off of the open when it's hitting a 30 or 15-minute level in this case. There you go. And I would do the same exact thing tomorrow. Now, tomorrow morning, I would be a little bit more cautious with that 8:30 CPI number. The NQ will probably move a little bit from it, but tomorrow do the same exact thing at 2 p.m. When Powell is getting ready to speak, dive down to a very small time frame. And again, I don't know where 15-minute levels are going to be tomorrow at 2 p.m. That's 26 hours away, away from now. Very, very hard to figure out. Dive down, drop into these 15-minute and 30-minute levels and see where we are, and then drop down into those 2-hour call spreads, 2-hour binaries, or maybe even a knockout and see where we are. Go check those small durations. There could be a really nice, bounce off one of those levels tomorrow afternoon. And that's how I'd be playing the NQ. But right now with it, hitting a new high and kind of basing and kind of stuck and, sitting in the middle, we're just retracing this, emotional move from the open. Now the S&P, kind of the same thing. Now the S&P hasn't broken through. It's got a little bit more up here. I can go up to a 30-minute. Actually, it's probably the hourly I need to go up to. We'll do it on the 15. Go up to an hourly. So I'm going to draw this box. I'm going to steal it from over here because I have those lines. We'll just leave those lines there right now. Here's the box, and that's an hourly level. All right, now you can see now, is this the most secure hourly level? The answer is no. I mean, we've kind of hit it here. Let me give you a little box real quick. We've hit it here, right? We've hit it here again. We've hit it again, and we've hit it again. Now, these levels of sellers only are going to last so long, okay? This one I would say right now, although we may take one more bounce, I mean, we may get it later on today, the S&P is also set to break this level. And again, this is one of those situations where we get a pop through, a pullback, and a push forward. Just like if prices were able to drop down again, we were looking for a break if we got the correct parameters. Kind of looking for the same thing here, and the way that it looks, what I would do is I'd be setting, and again, remember, I'm doing this all on one platform. It's ECN based data, so my figures and data is going to be slightly off. But look to see what the high is. Figure out how to set yourself an alert. Look for this 39.18 or approximately in that level, and look for a punch through, a pullback, and then that would be a signal to go long. Kind of what we saw right here. In this case, it didn't go. We didn't get too much more of a push higher, but I would say the S&P with any type of good news, and again, I mean, Powell can say a lot of things. This gives us the ability to punch higher, but it's about getting the correct defined risk is what we really need on there. Unfortunately, this morning, look at this. They just missed the entry down there. There's a small entry for the S&P. So again, S&P is not as flexible. It's not as reactive to COVID or anything technology-based. But anything technology-based, NQ is going to rally. This one is, I'd say it's may roll over and kind of run out of steam. But I think any break of 39.18, you got to be looking to go long this one for the rest of the week. Dow, kind of the same thing, right? I'll drop it down to a 15-minute. You guys can see where we are. Dow also, there was a level down here we were looking to get into, and kind of the same thing. Unfortunately, you missed it. That was also the open candle. That was the 9:30 candle this morning. There's a small level there, and I would love to tell you guys, hey, listen, I grabbed that level because, yay. I didn't grab this level. I was doing other things at the time. I was looking, at other things for the open for me. And like I said, in all honesty, the indices are not my first go-to. I typically go to currencies first and then indices. There is your open. And again, this is exactly what I'm talking about. Look for a small level like this, some type of basing, and it was tested at the open, at a speech for Powell, at something like CPI. Those are all the ideal times to find these setups. Now, right now, you may say, well, listen, Brian, we're up in an area right now. It looks like it's an hourly level, and you're absolutely right. But what's the catalyst right now during lunch, right? I can tell you right now, in New York City, anybody that would have been on the floor right now is out eating lunch somewhere, right? They're on break. So the volume tends to dry up right now. But it's nice that we're stuck in this area. If we can hold this area, this could actually give us one of two things. One, this could give us a breakout with an end of the day rally, or we could follow kind of what the S&P is doing, is kind of hitting that level and pulling back, which is not necessarily a bad thing. Okay, here's why. Here's one area of hits. Here's another area of hits. Here's another area of hits right here. So that is 3 separate times now that we have really tested these sellers. That means that they are starting to really run out of ability to kind of turn this price around, which means, again, all-time highs that give us an established level of risk to be able to punch higher in one of those continuation patterns to the top side. Now, could we do this from now till, say 2 o'clock? Sure, absolutely. Could we do this from 2 to 3 o'clock? Absolutely. What does that do? That signifies an end of day close to an all-time high. Okay. And again, those things happen all the time. And here's the thing. If it bases here, if it stops, and if it does, and it turns around and rolls back down again, so what? Remember, this is an if this, then that. It needs to go up. It needs to base for a little bit of time. It needs to pull back, and there's our risk. And then, boom, we punch higher to the top side, right? So again, nice little level that we're at right now. I'd probably stop back and again, if you want to set yourself an alert, go ahead and set yourself an alert just a little bit higher. You could do it as up here around the 31,400, so you know that it's breaking through. Maybe even a little bit higher than that. Maybe like maybe like a 31. Yeah, you could do it off 10. 31,410. Set yourself an alert. Let it know that it has cleared this high. Because remember, the first touch through, whether we break, it's going to be a support and resistance trap. It'll most likely pull back rather quickly to kind of trap those people. That's why we're waiting for it to go up, base, and pull back. Let those people, sell those things, the positions and take it long. All right. Well, let's switch over and go to the currency realm. All right. So again, this is typically where I look to first. Now, the Aussie dollar has not had much movement. So, this is a level we talked about. I'm not going to beat a dead horse on this one. 77.44. Now, this is a level that if I bring it up to a 4-hour, you can see here that it is a decent push up a base sideways, and then it got hammered back to the downside. Again, has it been slow to get there? Yeah, it had a great rally up, an impulse, a corrective move, an impulse, and then it kind of got turned around at a little level. It's like, oh, it's trying so hard. It's so close. It's right there, right? So we know that it comes in right here at the 77.40. Now, why I like this one again, the curve here is really kind of the highest quality. And again, this was done on a daily basis. We know we're in the upper third. We know that we should be looking for short positions. It's really about just finding the right opportunity. And right now, we haven't really gotten it. There hasn't been a whole lot over here that we've been able to take it short off of. There was the little area here, right, this white zone. And if you go to the left, you can see that's what it's kind of having problems with right now. But once that's cleared, it sets us up for a nice little position. And again, I'll drop this right here. You guys can see that that's the last time that this kind of drop happened. So depending on what time of day we hit that, whether it be a European Open or maybe even an Australian, news-based release, there's two areas here. You could take it off this 77.44, or if you want to be a little bit more conservative, you could come up here and take it off the 77.50, right? And again, all these things, I mean, these levels that I talk about, the best way to do it is to go out there and say, okay, listen, is there any call spreads there? Are there any knockouts close? Those are the type of things that we want to look for this position, for these type of positions. All right. But again, we are in this kind of bearish thinking. We're looking for a level. We're looking for some quality. I will say I would watch this level right here as far as taking profit. And I'll change this to green so everybody's not confused about, we're going short there. So any type of short from the 77.50, 44 level, 77.01, 77.05-ish is going to be where you want to get some profit. Drop that one about 50 pips to the downside. Now, ALTA yen. ALTA yen is in a level that we were like, hey, listen, we got a Harry Potter set here. We're waiting for it. We did kind of expect it. This area here, we expected some type of rollover, and that's where we're looking for the bounce. It's only taking quick stabs, so it has not met our entry yet. It hasn't fully triggered. Remember, we want it to drop down, base a little bit, so you can see a little bit of space, right? I've done this trick before in the past where, like, when I mean space, being able to draw like a little bit of a triangle into there. Make sure you can see something underneath of it, right? Right? Don't just have it spike up and down. That's not what the trigger is. We need it to base and stabilize before it pulls back. But once that occurs, we're still looking for this one to come down to 80.44. I am, again, curve-wise, obviously very, very high. We expected some type of a rollover here, but we're really looking for this one to push and come back down into this 80.36 area. All right? So delete this in here so I can use this. Whoops. Let's delete that one right there. So we're looking for a break. And again, 80.71 is my trigger, but I'm looking for a decent pullback. At least on the 30-minute, we have not gotten it. We are at an hourly level right now, so I would expect sellers to step in here at some point. All right, now this is probably also the yen play at this point, because obviously the Aussie market is closed. Now, euro yen. Euro yen was driving. Now, we drew a couple things on this one. We talked about, price coming back up, and we ended up getting the short here. It dropped down. We were looking for another level of basing, and actually, let's draw. We talked about this level right here as being kind of the entry right here. We touched it, we hit it again, we hit it. It used it as kind of a bottom. It pulled down, and then bam, we got an entry here and another entry down. We're looking for this one ultimately come down to 126.44. It moved. I don't think it quite made its 3-to-1 on this one. I'm not gonna use that level. I can use either one. Let's refine this here. That's where the original level was, and again, you can see the here, the hit here, the basing through it here, touch, and then the base here. So a couple different ways. We'll use the white line. I can actually technically use the top one, but we use the white line just for today. Yeah, it ended up going. It did end up hitting us 1 to 3. So I thought it had a little bit farther to run. I must have drawn this one a little bit higher. I may have used the entire wick on this. Anyway, at this point, what I would say is there is another short trade in here. I am not opposed to this level here at 26.70. Looking for that one. It'd probably take a short. It's been teased. It's not ultimately fresh, but it was a decent pop and then roll back to the downside. I'd like to see where we are. Let me remove this just for a second so I can kind of clear some of this, just kind of give you guys a bigger view of things. I'm trying to take as much off as possible here. And here, I'll show you exactly why I'm talking about this. With this tomorrow morning at 5, oh, that's actually Thursday. Oh, we got one more day for that one. All right, never mind. That economic news, and again, we will talk before then. I'm going to be looking at one of these small levels like this because I do believe that this position is going to be more bearish. I do not think that anything in that economic forecast is going to be, I mean, I expect some positive data because we're seeing it from multiple countries. But I still think that there is a major risk in the EU right now. They put out huge stimulus packages and things like that, but we are still hearing about additional lockdowns, and they seem to be behind in the recovery versus what we are. And I think depending on where we've pushed to, I think there's most likely, I mean, unless we get a lot of movement tomorrow, I think we're probably going to be more of a short position prior to that news release. All right. But right now, again, if we get just a little bit higher, probably up at this 126.70 is decent. 126.24 is my profit, as well as a bounce level for me to go long. So if we can get down to this level here, I think there's again, take your profit, look for a bounce, and then look for a punch higher. And again, that's coming in right here at 126.27. Okay. Pound yen. All right, so pound yen. As you can see, I talked about this morning, but I'll cover it again. This is another one of those Harry Potter type situations, right? I'm looking for this to come down and break. Now, it's been able to stabilize since this morning, which is totally fine with me. I mean, again, this is a level that we had seen buyers step in. We're not surprised that it took a bounce off of this, but if you were unable to trade this in the overnight session, if you woke up early and just saw it, it's too late to get long into the position now because it's already moved. You want to get in here, not higher. But for later in the week, we know that if we can break through, we've had 1 touch, 2 touches, 3 touches. If we get a break of 143.90, we're looking for a base below, a pullback, and then this one coming short. And this one, I think, overall has targets down into like this 124. Really, I mean, to be safe, probably 123. So, I mean, we're talking about a 90 pip mover to the downside if we can break. Now, where prices, it is near a level of sellers right now. So, again, it may start bringing us over. Ideally for this one, if we can get this to kind of just fold and roll over now and kind of be down here for the UK Open, I think that would be an ideal situation. I'd be willing to take this one. For those of you that are East Coasters, obviously the European Open is a little bit harder to trade. But I'll tell you guys right now, this one has been a pretty nice mover in from early morning hours. If you can catch something tomorrow, this could be a big drop back to the downside. And overall, I think we need to be positive the pound, but again, we're looking for a bit of a pullback, and again, we had a nice short last week on it. So, this is something on my radar as well. Set my alert, set your alerts down here at 43.80. If you guys don't know how to do that, I always get asked what platform this is. This is MT4. What I would recommend is go over to IG. If you guys are really looking for, a good program to be able to get alerts out of, you can definitely do alerts inside of MT4. But IG has a web-based client for currency positions that has a great alert function that literally will send them to your phone. All right. So if you guys are not sure, you hear me mentioning alerts, go over to IG.us, get yourself a demo account, and you can do it on demo. It's fine. I mean, we're talking about 30-minute candles here. Set yourself alerts. They have a very good system for it. Set an alert for this break so you can start taking advantage of these. And then again, if you're in the middle of the day and this breaks, you'll be like, Brian, I missed another one because I have a full-time job. Well, great. Set yourself an alert. It goes to your phone, take a 10-minute break at work, set the trade, log onto your Nadex platform. Boom, you're good to go. All right. There's our pound setup. Our yen setup. So this one rallied up and was at this higher level. So this is one of those ones we were looking for a decent push, and this is where we ended last week and had a little bit of a gap. And again, a lot of these I don't necessarily hold over the weekend. Right now, I mean, this wasn't a weekend gap. This was a morning gap. Right now, the way that this is basing, it was bound to break. I mean, we touched here, touched here, touched here. You guys can see it's had a lot of touches through this level. We are now sitting in kind of almost a no man's land, right? And again, you can see that we had the touch here, touch here, touch here, touch here. Number 4 was the magic one that went through. I think we got to remain positive. Like I said, I'm looking for the pound to come back down again. There's not really I mean, if I was going to set a similar trade, I would probably set it off of, let's see, probably, you can move, there we go. Probably off of this level. And again, I would use that level there. We had the same pop-up that we have in the pound yen. This one's kind of the same thinking. It's a break of 137.30. But right now, I mean, you can see, is this one really going crazy with trend? No, not really. I mean, since 3 o'clock this morning, we have moved a total of 11 pips. It's just not enough movement, and you can see all it was chop back and forth. No economic news, no nothing in there. This needs something. And I will say, I mean, if we can, let me remove this blue one. I don't need this blue one anymore. Try to make this as simple for you guys to see as possible. If we can kind of push down right now, from now till tomorrow afternoon, and it would be more over here somewhere, right? It would probably be over there. If we can roll over before Powell speaks tomorrow, and again, if Powell mentions anything about stimulus, supporting company, things like that, that could be a big weakness for the dollar. That could be a nice little takeoff point tomorrow. So, right now, unfortunately, there's not a whole lot left in this one. It's having some problems with some sellers, but there's an area sitting right here at 37.39 down to 37.30. So about a 9 pip zone there. Change this to black. Okay. This is a probable takeoff point for UK session, a Powell speech. So again, another area where you want to set some alerts on this one. Like I said, today I'm not really interested in much, but overall I'd be looking for that. As far as larger time frame goes, we got a bit of room to run up until we end up running into other zones, and it looks like 139.18 is the next area, which is about 123 pips away before we hit another area of major sellers. So, at this point, let's see how far we can run with this one. I need that one over there. Those are good. But I'd watch this level. I think this is the next level that we have a probable bounce coming off of with news. All right. Looking at Euro Pound. So Euro Pound had a level that, again, we rolled this morning. We came back down. Here's your parabolic move. It went exactly to where it should have been. The profit target will always be the top of the body, before the move. It's doing what it's supposed to. Now, this is also a European. This is a Euro Open position. This one ended up rallying about 30 pips. It's not huge. This one looks like it's gigantic, but it's not. And just turned slightly above. So again, we can adjust this zone now. I don't need to check anymore. Let's see. It's a decent level too. So right now I'm going to do this. And if you guys are looking for intraday trades, this entire zone is only about 60 pips. So just keep that in under advisement. Right now, this inner area here, this is the center of the curve. Okay, you guys are able to see it spent a lot of time here, right? I mean, it came down, didn't spend much, came back up, went high, came right back down. So this is kind of a no trade area for me, right? It's going to be a lower probability area to kind of take off of. I would look right now, if we can get up to 87.90, I'd be looking for shorts. If we have anything down here at 87.40, kind of the same thing is where I'd be looking for my kind of tops and bottoms right now for longs and shorts. So again, this is not the biggest of ranges. On Thursday, this is going to be one to watch. The EU economic report, this is good for that, right? That's good for this on Thursday. 5 a.m. Eastern Standard Time on the 11th. Bring this chart up and see if we are in either of those two zones. And again, that could be a decent launch point, top and bottom. And again, 2-hour binary, small call spreads, maybe a knockout depending on where we are in either of those times. We got to see what the knockouts look like from then. But again, probably a 2-hour binary would be the best option if we were in either of those two locations. Now, euro dollar, okay? Euro dollars had a bit of chop. As you can see, this blue box was the European Open. It ended right there at 9 o'clock. I've been tracking the European Opens for movement. As you guys know, and I mention all the time, and I hope more people are taking advantage of it, the UK Open in the shorter duration binaries, and again, it doesn't have to be just the 2 hours. It could be the early morning contract, right? There's not just one daily contract. There's the 7, there's the 11s. I mean, there's the early morning ones. Just that bit of movement in here has been great. The 11s are some of the best ones we see. Right now, I have to say, to me, this one looks like it wants to turn and roll back down. It's having a harder time going higher. The lows are still lower. And again, since the U.S. Open, we've gotten, again, dollar weakness put in there. But this one is kind of interesting. It's not near any major zones, which is kind of what stinks. But I think this 123.28, the last time we were over here, we had a decent level of base and a drop. So that could be a level that we're looking at right here to here as a potential kind of roll point, right? There's a little gap in there. I could probably draw that too. Let me just draw the gap. I'll do it off that level right there. Let's change this to a pink as a possible short right there. Todd, I don't know if you're out there or not. Can you check for me real quick and see if there is a knockout bracket over there real quick? I want to check one other thing here as well.
On the Euro US dollar?
Yeah, somewhere approximately in the 121.28.
Here, I'll tell you what. Give me 1 second. I'm going to take over and we'll just flip it over here real quickly, and
Yeah,
we'll explore together. How's
sure.
that?
Up to 121.38-ish. Yeah, in that area.
All right. Let's hopefully. let's jump over here to the knockouts, and we're going to euro US dollar right here, right?
Yep, that's going to be in that area.
And here we go. Well, actually, I'm just gonna. It's easy to bring them all up. It's just because we can always pick which one. And are you looking for one
Around with a ceiling approximately around 121.38.
that's we've got? I mean, here we go.
Oh, you're to 121.43. So yeah, that one actually matches. As you can see on your chart, you see how there's that little gap in there, that level of basing, and then a nice push away from it. Those tend to be ones that are pretty nice to look at. Just slightly higher where you are. Yeah.
Yeah. So right. I mean, and this is the gap that you're referring to.
Yeah, there was a gap and then a base after it, and then you see the strong movement to the downside. Yeah.
Right, and that's exactly what Brian's looking at here.
Yeah.
So we would kind of look for it to eventually fill that gap and then roll back over.
Yep. Yeah, exactly. Yep. Roll and then fill. Yep.
Right. So definitely one to keep your eye out. Euro US dollar, and if that's playing a little too close to fire, you can always give yourself a little extra room so you don't necessarily get knocked out. Mm-hmm. It gives you a little bit of extra space. I mean, your risk is still pretty low, but if you're looking for it here, I'm going to draw this in. Let's make it much more visually appealing. Is this is that area that you're looking at?
Right around that area. And then, like I said, the reason I said look for knockouts is because, you mentioned, it does have the ability to get knocked out. But remember, at the end of the day, every position that you take is going to have some type of a point where you have to be willing to admit that you're wrong. And everybody has to figure out what that level is going to be. Some people will say, well, if I risk more on it, then it's less chance to get knocked out. You're true. Yeah, absolutely. But you're also taking a lot more risk on, and you have to be thinking about the other side as well. That is there, what is my profit target? But just because it's your profit target doesn't mean that that's where price is going to go. You have to make sure you read the chart and get a feeling of, okay, what is the chart telling me? Where is the most likely spot that it's going to either reverse or have an issue, or what type of news events are going to be in the way that could potentially flip this on me? Because, there's no way to know exactly what news is until it's here. Anything. And again, the market is an irrational being. It'll do whatever the heck it wants to do. It doesn't follow anybody else's rules. So I actually like that one because it's close. Does it put more risk to get knocked out? Sure, absolutely. Absolutely, without a doubt. But at the same time, you got to be looking at the profit target as well.
And the nice thing there is with the knockouts too, I mean, you don't have to necessarily be in front of your screen. If you wanted to say, all right, I'm willing to go, I would sell one of these at 121.35, for example. You can place an order, well, it helps if I type the number in, right? You would be able to put an order up above the market, and if you weren't in front of your screen and it were to go up there and trade, you could potentially sell one. Now you could also potentially get knocked out because it kept going higher, but you can place orders, offers above or even bids below, so that if you're not in front of your screen, you don't have to necessarily wait for the knockout levels to take you out. You can choose to manage your risk how you deem fit. So definitely kind of interesting. There's a play in Euro US dollar. I'm going to go ahead, Brian, and give it back to you.
Okay.
There you have it.
All right. Let's see. I got to go back in.
Yeah, no, the little handoff between these isn't exactly perfect, but we've solved it.
But we're getting better. We're getting better.
We are getting better.
So that's a Euro dollar one, guys. Dollar CAD. So dollar CAD is pushed down to a level that we mentioned earlier. I guess really we've been following this one for a while. Talking about getting short this position down to 127. Really it's 126.99, but we're basically right where we're at. This is the target that we were looking for. Unfortunately, we were waiting for it to pull up to the 127.75. It didn't do it. You gotta hate when it does this. And again, we missed it by about 10 pips. So this is one of those things that it can be frustrating. We knew that there was a small level here where we may have a little bit of a hiccup, and the hiccup ended up being more than a hiccup. It was a pothole. It stopped it. It drove it back down again. So Overall, this is where we expected the price to go. It is back down there, and the big question is now, what do we do with this level now that it's down here? I mean, it's hitting a 4-hour zone. It's been, and this is a 4-hour chart, and I brought it to a much higher level. This has been in 4 hours. This has been a 65 pip drop. Okay, the daily ATR is only 88. So in 4 hours, we've covered almost an entire day's worth of movement. Couple different warning things about this zone. All right. And again, you can see that the bottom of that zone comes down to about here. All right. So hopefully you guys can see these things. Right there is hit number 1. And again, there's a little pullback, but there's hit number 1, and it's a clean hit. Here is hit number 2. Now we are approaching, and we're coming in at hit number 3, right? We're not quite there yet, but we're getting close to it. Remember, these zones do not last forever, okay? There's only buyers there until all the orders are filled, and then it will collapse through. And a lot of times it will end up being an area where there used to be buyers, those all become sellers. All right. So it's kind of an area that now I'm wondering, like, where do we continue to take this down to? All right. So I dropped it down to an hourly, and you can see that it's kind of a funky area where we've hit. Here you can actually see that there's actually been, whoops, not that one. There's actually been another hit here based off of that original level. And that original level is really kind of in here. So the question is, how do we play this one, right? Do we take it off of the refine level up top? And the answer is we could, right? The refine level is more or less this green bar. The more conservative entry is the yellow bar. But overall, looking for profit targets to the downside, on a 4-hour, you can see that we got a pretty big kind of gap in here, right? To run to the downside. You can see it, let's see. You can see it really until we get down to kind of this level here, probably is where the original test is coming in. We got kind of and again, I'll use it off the yellow just because it's a little easier to see. Something along these lines. Actually, you know what? I'll steal this one right now because it's farther away. Redraw it later. Something along like here, and then we're looking for kind of a push down to this level, right? This is what I'm looking for probably later in the week. Oh, not slate gray. I'm looking for green. There we go. That works fine. As maybe a first potential target there, you can see this little line is really where the 1 to 3 comes in. So kind of an interesting little setup there. And again, you can use the green if you're a bit more aggressive, the yellow if you're a bit more conservative. But either way, if you guys are going to work on setting alerts this week, I'd set an alert around 126.75. A break of that level is really where we want to kind of see it push down. And again, remember, some of the telltale signs of a break is if we come into this yellow or the green level and we start basing and going sideways, that tends to be where the actual break occurs. So, decent way to push to the downside on that one. But yeah, I'm definitely interested in this one coming south. Dollar Swiss. So this was one of the potential. I don't know. There's typically every morning we have a couple different setups that we like to talk about, and it's really about finding kind of, all right, which one do we end up using this morning? We try to give you guys the highest. This was one of them, right? This was one of them. Here's the Harry Potter, right? Now it's about 3/4 of the way to profit target, so it's a little bit too late now. But again, learning experience. We had a prior level, and again, I'll drop it down to a 30-minute. It's exactly what I talked about. There was multiple hits in here. The original zone was formed back, but you had one hit here. Whoops, don't do that. I hate when it does that. You had another hit here. We had another hit here. This was number 3. 3 was the breaker, so we were using that same level as our established level of risk, and that's exactly what we're seeing right now. There's your push down. Your original risk level was, again, that same level, and this gave us a decent level right there. Change this to pink. So everything I just explained for the cat in the last one is exactly what we're seeing right here. I'll bring it up to an hourly so you can kind of get it. But you guys can see, basic level of risk. This one has a profit target down here at 1817. So not much we can do with it, but again, I would look for some type of a basing level there. And again, Powell could bring something fun into this one if we can drive a little bit low. Remember, the dollar Swiss does not move as much. Unfortunately, today the trade has already occurred. This is probably one of the ones we should have covered and done it this morning, but hey, hindsight's 2020. Next area for a potential rollover, though, I would say that there's a decent level. Let me remove this. There is a level sitting right here, which was a gap. which I'm going to change this to a green level because this one is definitely a probable kind of area to launch off of. I like the way that this gap down at base and then it kind of took off running from there. But profit targets for the shorts 89, 18, and then potential longs on this bottom piece are going to come in at 89.02. All right. So if you want two profit targets, 89.18, second one 89.02. 89.02, look for that one to kind of bounce, come up, and then pull back and go long. All right. So, from where the Harry Potter is now, flip it around, reverse right back up into the same area. I'd imagine next day or two, we'd probably be in the same about area. All right. Yen. There was our yen trade from last week. You can see it's messing with us. It almost hit our 1 to 5. It has pushed all the way back down again. So, this was a trade setup from last Thursday, I believe. The 5th. The 5th was what day? Yeah, it was Friday. So this was a Friday-based trade. Well, we set it up on Thursday, but it triggered on Friday and pushed lower. Right now, again, we've seen dollar weakness, yen strength across the board. This was the ultimate play of those two together. On a 4-hour basis, it's coming back, and right now you can see that this is an area that has based, launched off of them, was tested, and that's kind of where we're stuck right now. It's an interesting level for the fact that, again, this is a 4-hour base level. It's had very, very strong movement over the last 12 hours. Is it due for a bit of a retrace at this point, or will we get the stabilization, and will this be an area for us to drop lower is the big question. 1 o'clock in the afternoon is typically not, it's 12:52, but 1 o'clock is typically not the best time to be able to find a reversal in this one. I would say with as much dropping as it is, right now, I'm going to use this box and say that really this is the curve right now that I'm kind of focused on. I guess I could use a little bit lower, but probably there. And again, this is just, I'll change this to its standard color. Getting a bias, I don't have a trade setup on this one, but as far as a bias goes, that's kind of the bias that I'm using. So while this is a great target, not necessarily the best place to set up a new trade, but I would keep both of these areas. This 105, really 105.50 up top, and I'd be looking down here at 103.65-ish as another decent level that we could take a bounce and kind of hop higher on. But I'd like it to move up or down, and this one is definitely at risk for Powell tomorrow. But right now, being in the middle of the curve, it's kind of in no man's land for me, so not as much fun. Now, gold. Gold is kind of it's stuck. It has no idea what it wants to do. it's literally, it's banging off this zone. It tried to go higher and then pull back and tried again and then pulled back and went low. And then now it is still stuck in that same area. So it's an interesting spot. We're hovering around that, 1835 to 1840-ish level. It's not, curve wise, I'll bring it up to a 4-hour. Curve wise, I would say that, this is kind of what we have for the curve right now. And you can see we've just kind of peeked our head out, but as soon as we kind of go into that top third, what happens? It got slammed back down again. Now, it did grab more orders and is trying to rally again. This is one of those ones right now. It's in a very interesting situation. It's low. It's kind of swing lows are still getting higher. Its pushes higher are starting to get a little bit stifled by this area right here. But ultimately, I would say that the 1860 is really the last clean area where we've had sellers step in, right? Right here is really the last clean, because again, a little bit of a hiccup here, push down. We've played with this area enough. This is the next really strong area. So, as far as looking for shorts, I'd probably wait for the 1860. This level that's drawn right here, I would not pay any attention to it. It got literally pushed to the very, very brink and then kind of turned it around. So, this, you could have taken something off of here. But again, you wouldn't trigger this morning. So gold is just, it's stuck. Kaplan's comments today were great. Kaplan is not a market mover like Powell. Right now, I think, again, tomorrow, let me show the news here just so you guys know what's going. This data tomorrow will move gold, and then Powell will move gold. They all have the power to do it tomorrow. But this CPI, the inflation number, is definitely something that we could see move it. So right now, I would say if you're looking for long or shorts, really, we really need some movement top or bottom. There's just not enough in this one right now to really set up something that's super clean. But again, if we break above the 1841 in this level again, 1845-ish area, you got to switch your thinking to, hey, we got to get bearish. We got to get bearish. But right now, really since this morning, about 5 o'clock, we haven't moved. It's gone up a little bit, down a little bit, and we're back in the same level. Gold sellers are out of the market right now. Silver. Silver, we had a short position. We were looking to get short that one. It's a level that had been tested one time, and we saw some sellers step in. There was a small minor level. Again, we have this larger level here. Looks like it right about 9 o'clock today. If you guys wanted to get in early, here was a short-term level. And again, it's already gone. It's already completed. There's not much we can do, but it was a refined level inside. I would say, going to an hourly is using that as our larger time frame. I would say that silver is at the top of its curve. If we drew the line really here is where I draw it. If we get a break above, and this is something we mentioned before, if we get a break above, really 27.90, if we can get enough of a kick high, this one has profit targets up here at, there. Whoops. I just want to take this. So with a break of really 27.85, I'd go long looking for 28.57s. Right now, I think we're going to have a little bit, and I'll use this yellow one right here. If you guys look at the way that there's a gap in here, right there, this is an area right now that it looks like we're going to have some issues off of to the top side or to the bottom side. So, kind of the same thing. Silver market's closing soon. We don't have a whole lot of room to run either way. So, yeah, I would say small intraday plays, we're kind of wedged. CPI tomorrow will be another way to play this one. Powell is another way to play this one, but right now I don't really have a good movement in here. And again, silver's not at 50. Obviously, the Reddit traders are have forgotten about silver and have had to find something else at this point. Because again, it's at 27. It's not at 50. So we'll see. All right, let me pull up gold cross. Let's go ahead and look at oil. All right, so oil. Yesterday for my traders, and let me go back to here. I was looking for this to come just a little bit higher, right? I was looking for 58.70. You can see this one got up to 58.60. I got front run on this short back to the downside. So, I'm kind of looking now saying, hey, we got oil inventory report tomorrow at 10:30 a.m. We've had a nice run down in the overnight session, and this is a 2-hour chart. Let me bring it down. I was like, wait a second. Whoops. Let me go down to an hourly. All right. So you can see this is kind of midnight. Here's the European session. European session down, US session back up. We're at the same exact spot. Kind of looking for the same thing to occur here. We got a little bit more room to run. We got about, 30 cents higher. If we can continue rallying higher on this one, I'm kind of looking for a short tomorrow before the European Open or at the European Open. Todd, I don't know if you have this up. We probably have a knockout somewhere in the, I would assume 59 range. If you want to check that for me real quick.
It helps if I take myself off of mute.
It's okay. I did it to the
knockouts, and we'll
take earlier too.
Let's take a quick peek at what we've got here in crude oil. Let's move.
Oh, they're at the 50s. Yeah, they're at the 50s. It looks like. Man, we're right in there. Yeah, it's good. This one's going to be a little bit tighter. So.
Yeah, this one's a little trickier here, just with where the levels are currently playing out.
Yeah.
It's sort of between the two levels.
What I would do is on this one, maybe switch over to call spread, see if we have something.
And I was just about to do that, and just
and remember for the call spreads, guys, on this one too, we're gonna probably have to wait till tomorrow's because remember the dailies are done. There are no weekly call spreads. Nadex, if we get those, that would be great.
Yeah, duly noted.
But because we don't have those, as of once we reprint the contracts at the end of the session today, when we print tomorrow's, that could give us an opportunity. And remember, the one difference between the call spread, right? The difference between the call spread and the knockout is if it does go above, it doesn't take us out of the trade automatically. It doesn't take us out for profit on the downside either, so it's going to have to be something we manually close. But one way to look at that one is if, we know that 70, or what is it, 58.70 to 59, that little kind of 30-cent area out there is a decent selling area. We've seen it on a much larger time frame, right? So what we could do is wait till Nadex reprints contracts 6 p.m. Eastern time today, go back in, see where the dailies are, see if we have a call spread that lines up, and depending on how close we are, you can either set a limit to take the acceptable level of risk that you want. If there is not a level of acceptable risk that you like, you could either wait till later in the night to kind of wear out some of the premium, you could come back and check this at the European Open to see if we are approximately near that level, or you could even take it tomorrow before news and maybe one of the shorter durations as well. So number of
Right.
different things with it rallying back up. Again, find the risk level that matches what you like the best. But I think that 58.70 to 59 is an important level, because even with no news today, we saw that this thing had about $1 drop to the downside, and crude oil provides typically $1 to $1.50 worth of movement, whether it be in the European session before news or, at the actual inventory report. I was like, oh wait, what just happened to my screen?
And I just sent it back over to you.
Yeah, so I was just saying. So a couple of different things. Look for where we're at tonight. Again, look where we are in the UK session open. Look at the US session open, and remember, I'd say the last month or 2 months, we've seen a lot of oil-based movement in the UK session before the oil inventory report has come out. Just to add that in there, makes it a little bit more interesting. All right, that's the last one. And again, be cautious of those Reddit traders, guys. Here's here's GameStop. Before Reddit got involved, they were at $48. Now that Reddit told everybody that this is let's take down Wall Street, we're back at $48. So be cautious of who you're taking advice from. Some of those poor people that bought it up here at $4.40. Oh, oof, it's hard. All right, so with that said, that's it for today, guys. Make sure you guys mark your calendar for next week, February 16th. It's crazy. February 16th is when I got married for the first time. I've actually been married twice, so don't tell my wife that I remember that date because she'd kill me. But February 16th at 12 p.m. Eastern time. If you guys are around, please make sure you jump into the sessions we do every morning. The group's actually getting bigger and bigger each week. If you guys have not watched them yet, please go over to YouTube and check some of those things out. As I said, the dollar Swiss was on the border of being one of the trade setups of the morning, and that one turned out to be amazing. We try to do our best to give you what's hot for the day, and love to have you guys over there. So if you have any questions for me, you're more than welcome to email me at support@keeptradingsimple.com. You can check out, I do stream a bunch of stuff to YouTube as well as Twitch. You guys are more than welcome to join me there. And any questions, who I am, keeptradingsimple.com. I'll catch you guys tomorrow morning. Take care.